Hello guys, my name is Margot and today we're going to be looking at the 25 habits of a wealthy trader. Have you ever asked yourself a question like what makes the good traders different from the traders who lose money? You have all heard that most traders lose money. Why is that? What makes the difference between those traders? Who are they? How are they finding entries? How are they doing their exits? How are they running their trading business? And how are they running their lives around their trading? That was what I really wanted to find out. I tried to avoid those some of the stuff that's kind of obvious that you hear all the time, like winners run, cut your losses. We'll see some hints of those kind of things, but I really wanted to get to the crux of different things that you may not have heard of that really make the difference between wealthy traders and someone who just struggles constantly or maybe have some winning trades and a lot of losses, because there is a difference there. They are doing something different. So let us get right into it. We're going to talk about what makes them different. Number one, wealthy traders are patient with their winning trades and enormously impatient with losing trades. Therefore, this is different from letting your winners run. Most traders get into a winning trade, and what happens then? They get extremely anxious. We worry. Oh my gosh, I made money on this trade. I better get out now because what's going to happen if it goes to loser? Right. They start to get very impatient and they got their finger on the sell button because they do not want to have their winner run turn into loser. On the opposite side, if they have a trade that is going against them, many traders will say, you know what, I'm going to wait just a little bit longer to see if this thing turns around. Does that sound familiar to you? You probably have done that yourself. I know, I used to do that a lot. Wealthy traders do the exact opposite. They are patient with their winning trades and are ridiculously impatient with losing trades. What does it mean? It means that they are out immediately if it goes against them. Here is an example. Let me show you a graphical interpretation of what this means. Here is what a trade timeline looks like for a wealthy trader. So here you can see a couple of losing trades, then one winning trade, losing trades, win trade, then again losing trades and winning trade. But if you are going to be a wealthy trader, if you want to be a wealthy trader, you're going to cut your losses immediately. There, so you not let your losing trades go down. Wealthy traders are incredibly impatient losers, cutting their losses immediately. Therefore, when they go 3 ticks against them, they are out. It is extremely important. Number 2, wealthy traders realize that making money is more important than being right. There is this human characteristic we all have that we want to be right about our decisions. You were probably raised that way. The trouble with that is that you're locked into this idea that hey, this stock is not worth this much money, or opposite, this stock is way undervalued. There is no reason at all for the stock to be this low. I'm buying it. And the stock continues to go against you, really I'm right about this. I know I'm right about this. We have all heard the old adage, the market can stay wrong longer than you can stay solvent. It is important to realize that making money is the goal. You cannot express your will onto the market. It doesn't work that way. It will slap you in the face every single time. Therefore, that means they need to be able to change sides. If the market is telling them that they're wrong, that is okay. They will switch sides and do what the market is telling them to do. You cannot tell the market what to do. Traders realize that making money is more important than being right. Wealthy traders look at charts as a picture of where traders are lining up to buy or sell. What does this mean? Wealthy traders look at charts not from the lines or the bars. On the charts, they see traders lining up at places where technical analysis zones tell them something is going to happen. So, if your idea of a good trade is a certain moving average crossing over another one, They see it as other traders are there standing and waiting in line to buy or sell at that point. They see charts as simply a way to look at where traders are waiting to buy or sell. If you're drawing like a trend line down or a trend line across a horizontal trend line and something is crossing above, they sell that, as that is not just because it's crossing above the line. It is that is where traders are looking to get in and buy. Therefore, they start to see charts in terms of where traders are lining up. Number 4, before they enter any trade, they know exactly where they will exit for either gain or loss. Many traders say, I'm just going to get into this thing. I'll figure out where the exit point is after I'm in, after I get filled. Wealthy traders do not think like that. If they don't know where they are going to exit, they do not get in. You have to know these points beforehand and have an objective reason why you are choosing those things. So never get into a trade if you don't know where you're getting out for loss or profit. Number 5. They approach trade number 5 with the same mindset they did on the 4 previous losing trades. What I mean by this is we have all had those times when we would get 4 trades in a row that go against us. That is going to happen. Statistically, that will happen. What happens on that 5th trade that comes along? Your setup is there, but now you're gun shy, you're thinking, I'm not reading the market right, something is not right there, and I'm not going to take this trade. In addition, what happens inevitably? The trade works beautifully and would have wiped out the losses from those previous 4 losing trades and made you a bunch of money that day. It has happened to everybody, and it's not because you're reading the market wrong. Statistically, there will be times when 4 trades in a row do not work. If you're confident in your system, you have to be able to take that next trade with the same gusto and enthusiasm as you did for this 4 previous. The idea that they lost on 4 previous trades doesn't bother wealthy traders. They know statistics. They know that can happen. In addition, every time you do not take the next trade if it matches all of your criteria, it is going to be the one winner you didn't take, and it's going to just make you mad even more. So keep that in mind. Number 6, they use naked charts and focus on zones. Let me just show you something. That's a chart. I just threw out there bunched here, Fibonacci lines, moving averages, a couple of moving averages, and I can barely see the bars anymore. Technical analysis is not something where the more scrap you throw on your chart, the better it works. Let me tell you a little secret about technical analysis. There is thousands of different indicators out there. Every single one of them probably works. Every single one will work over time if it has been tested. You have to find one that fits your personality and your gut instinct as a trader and use that. So the most of the wealthy traders do not use any or use a couple of indicators. They will just use some indicators that they prefer. If you're waiting for 9 things to line up and say it is time to trade, you will get maybe 1 trade every 10 years. So just get used to watching price and price only and get a feel for that, for what you're trading. The more stuff you have on the chart, the more confusing it's going to get. In addition, it doesn't help you. It doesn't make you a better trader. Number 7, they realize that being uncomfortable trading is okay. We all feel like once we start to trade, we're going to get to a point that we're going to be perfectly confident in our strategies, in our indicators, in our technical analysis, in our chart reading ability. that trading will somehow become easier. Almost every wealthy trader tells that day will probably never come. You have to be comfortable being uncomfortable. You are never going to get to a point that you're going to be totally in harmony with the markets and able to find those trades that are always winners. The reason is that you're never going to have 100% complete information unless you're an insider trader. Most of the wealthy traders feel a little edgy every time they put a trade, and that is okay. You need to get comfortable being uncomfortable. Number 8. The markets are their workplace. They are a participant, not an onlooker. This is like a little more somewhat vague, but there is an important point here. New traders almost feel like they do not really belong, as if they are an outsider trying to rather get a nod in somebody else's world. In addition, you have to get past that. You have just as much of right to be there and make a living in the markets as anybody else. You have a right to be there. The markets are open to you. Do not feel like you are a fraud by trying to get in there and make money. There are people out there that will tell you, forget trying to trade hedge funds. They have much more information than you do. That may be true, but that doesn't mean that you cannot get in there with them and make money and learn how to do this. You have a right to be there. Be confident that you are not someone from the outside looking in. You can do this. Number 9. They stop trying to pick tops and bottoms. It is extremely difficult to see tops and bottoms. Let us look at this chart. So here, if you look at this, I put the times of the bars where price trend changes in between red bars. So therefore, you see the 2 vertical red bars on either side of the bar where things start to change. So how much of that chart do you think is encompassed inside of the 2 bars in each area? Maybe like 5% of the entire chart. So why do you think it is that most traders trying to make 100% of their living in 5% of the chart? How about instead trade outside of those lines when things are trending, when you have a much better opportunity to make money in this? Quit trying to buy tops and bottoms. Wealthy traders do not do it anymore. That was a fool's game. They all try to do it the first time because somehow everybody thinks that the way to make money is to find it. When it comes down to the blue line, I'm going to buy it and it's going to head back up again. It doesn't work that way. Trade with the trend. You are going to have a much easier time making money. Quit trying to pick tops and bottoms. Number 10. They stop thinking about the markets as cheap or expensive. If you do one thing today, I want you to never utter in your life again about a stock or future or an option as being cheap or expensive, because there is no such thing. A stock at $1 may be cheap, but if it's a piece of a crap company, you buy at $1 and it goes to 2 cents, that is the most expensive stock you've ever purchased. Likewise, like if Amazon is at $715 and they are about to come out with some new stuff and they're going to crush earnings and it goes to $815, that was a good buy. There is no cheap or expensive in a wealthy trader's mind. There is simply one thing. Is somebody going to pay more or less for this in 10 minutes, in 1 hour, in 1 month? That's all they think about. Stop thinking about the market as being cheap or expensive. There is no such thing. It's just how much it's worth later to everybody else. Number 11. They are willing to change sides if the market tells them to do so. Many people have a bias about what the market is going to do, and they refuse to make any trades that are against that bias. Wealthy traders do not sit in front of their computers in the morning, fire them up and say, I think the market is going to the X today. Change sides if you have a bias. Everybody has biases in their life. Number 12. They trade aggressively when trading well and modestly when they're not. Only trade more when you are in the groove of the market. Your trades have gone well that day, then maybe you can scale up your size if it's still in line with your trading plan. If your plan doesn't say to do that, then do not do it. Great traders only trade more when they're trading well and lower their trade size when they're not. You have to have something in a trading plan that says, when this happens to me, I'm going to reduce my share size until I'm reading the market better. In addition, if that means you go down to a single share and have to trade a single share until that happens, it's fine. Number 13. They realize the market will be open again tomorrow. I miss trades. We've all missed trades where we have said like, this is a good trade. Maybe I should get in. In addition, you do not. And it goes exactly how you thought it would. There will be 35,000 opportunities coming up in the future. The market will be open again tomorrow. Do not beat yourself up because you took a losing trade or because you missed something. There are opportunities coming seconds from now. Number 14. Wealthy traders never add to a losing trade. Ever. Now there is an idea that, okay, trade's going to go against me a few ticks, but I know I'm right on this. Therefore, I'm going to double up in size. I'll make even more money when it goes the right way. Never do that. If the trade is going against you, get out. And if you're not going out right at the tick, never add to it. Number 15. Cash is the goal, but never the measure of success. Why is that? I'm here to make money. So why wouldn't I make $1,000 goal my goal for the success? And the reason is that you're a human being, and when you attach to dollar figures to the success of whether or not I have a good day trading, you end up making trades you shouldn't be making in order to make $1,000. People who say I have to make $1,000 every day to pay my mortgage, to pay my bills, to do what was I making when I had a full-time job, you are going to fail because it will force you to make trades you shouldn't be making to get to the goal. Here is a better way to do it. Your goal as a measure of your success for every trading day should be, did I follow my rules when I got in trades and then I got out of trades? Yes, those things will lead you to cash, but as long as it is not cash as the goal, you're making as if you're following your rules and that becomes the goal. The cash will follow, but you cannot make it the initial goal. Number 16. This is probably the most difficult thing to explain. They provide liquidity to the markets while watching price and volume. What do I mean by that? You go into a grocery store and you see that 2% milk is the hot item today. Everybody seems to be buying 2% milk. So while everybody else is going to the back of the store, getting into the refrigerator and getting the gallons of 2% milk and walking into the line with the rest of people in line to wait to check out, the wealthy trader instead will walk up to the cashier and say, hey, let me get in there and run the cashier for you. In addition, They feel like they're the checkout person rather than the customer. Wealthy traders see themselves almost as a market maker. They treat their trading as a market maker, not as the end retail trader. Number 18. They have a way to gauge fear, greed, and speed of the markets. The problem is on your screen if the only thing that you're using is an hourly or daily chart. Those charts print a bar every 5 to 10 hours. They print a new bar on that time frame every time, and here is no way to feel for the forwardness of the market with those. Because they are printing the way no matter what is happening in the market, no matter how many orders are coming in. What I do is I have a tick chart up on the far left hand corner of my screen, and when I see that thing really start to move, like boom, 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 I can kind of a signal for me that something is going on. In addition, with only one time-based chart, I wouldn't be seeing that. It would take me longer to see that something is happening, something is going on in the market. That is what wealthy traders are doing. The tick chart is just an easy way. Number 19. They practice reading the right side of the chart, not the left. Everybody can see the head and shoulders after it has already been done, after it has already been built. The trick is, wealthy traders are better at reading and seeing those patterns now they begin to form. So we're not talking about mind reading or whatever, like a crystal ball stuff, but here is what I want you to do. On something that you're trading a lot and that you're getting to know the behavior of, I want you to look at the last couple of bars. And I want you to picture in your mind what the next bar is going to look like. Do that, and you will be surprised at how good you begin to get at seeing where that bar prints. It is about being able to see those patterns as they form, because that is the only way to make money. Try to read the right side of the chart that has not printed yet. Number 20. Every wealthy trader has an edge they can explain to their mothers. If you can't explain to somebody who doesn't trade, you probably do not have an edge. Therefore, it could be something as simple as a moving average crossing over another moving average. It doesn't have to be complicated, but you have to be able to explain it to somebody else. You need to sound like you know what you're talking about. If you cannot, it means you have some area of this is kind of loosey-goosey gut feel kind of stuff that is not an edge. You have to be able to articulate what is an objective reason why you get into trade and why you get out. 21. 1 or 2 trades a month make their month. That was surprising to me. I thought traders who were wealthy made money almost every day, and that is how they become wealthy. Nope. The way they made money was they had 1 or 2 trades a month that absolutely crushed it and a bunch of losses. In addition, that is how they made their living. Can you imagine the patience they would have and all the losers that they would have to go through or tiny years to make that? 22. They buy higher highs and sell lower lows. If you're losing money in the markets, buy the higher highs and sell the lower lows. It's different from 99% of traders are doing out there. Guess what? 99% of the traders out there are losing money. So do what they're not doing and you will have a better chance of making money in these crazy markets. 23. Their business is not trading, it's finding the right trades. Wealthy traders realize that their business is not just hitting the buttons, it is making money. Therefore, you have to wait for the right trades to come along and only then get into the market. They write down and record every trade: price, thoughts, news, and attitude. Keeping a trading journal. You have heard this. However, how many of you are actually doing it? Maybe you started doing it the first few days and nah, it's not helping. Trading journals only work over a long period. You have to write down stuff. You never know what that trading journal is going to reveal to you. You have to write it for a while and then go back and read it and see if you can find any patterns in your own behavior that are keeping you from making a lot of good decisions and making money. Number 24. Their conviction on an active trade remains unless something major happens. If the things that told you to get into the market have not changed, do not make any changes. Personally, the way I trade is I put a trade on, I put a stop loss in, I put a profit target, and I walk away. Because if I sit there and look at the screen and watch my trade, I will mess that up. I will get it out. I will try to add to it. I will do something that is stupid, that is not in my trading plan. Do not make any changes. Number 25. Try the reaction, not the news. Most traders try to trade their news immediately if it comes out. The wealthy traders do not trade the news. They trade the reaction after the fact, because it is actually an overreaction. Therefore, they trade the reversion to the mean. Trade it back to the normal levels, because if you trade the actual news, because you just don't know what the reaction is going to be. So do not trade the initial reaction. I hope. So trade the reaction, not the news. So we're finally done. I hope you'll find one or two things that you can implement in your own trading. Have a nice time.